Very good morning to you. It's the Flow Show on Wednesday, the 4th of February. Hope you're doing fine. Got a bit of sun this morning. It's been a rare occurrence here in the UK for quite a few weeks. So we're going to enjoy it while it's here. Anyway, hope you're doing well. Morning, K-Man.
Good morning, Ryan. Good morning, everybody. Actually, looking out of my window, there is a bit of sunshine. Summer has started.
Yeah, I wish. I think it's going to get a lot worse before it gets better. I know that for starters. Anyway, let's get cracking. Bit of a quiet headline day yesterday, so we should fly through this pretty quickly. First, there was a bit of a sources piece out on the Bank of Japan overnight that they're not in any rush to jump into the bond market, given all these ramping up in yields that we've seen over there. According to sources, the BOJ has a high hurdle for intervention, which has not yet been met. And they're also not really looking to jump in when the rises in these yields have largely been driven by the fiscal news and what Takeichi is up to. The source saying that the BOJ would step in only during a panic sell-off driven by speculative trade or a destabilizing move that requires a central bank to act as a market maker of last resort, saying that neither scenario has unfolded so far. I don't know if that's the sole reason why we've seen a bit of a jump up in yen pairs this morning. It's a bit of a big move for those headlines, but who knows anyway. Coming over to some of the data that we've got, we had some bits and bobs out last night. Kiwi jobs, which saw the unemployment rate rising to 5.4%. We had some labour cost data in as well. It's all Q4 stuff. So it's we only get this once a quarter. The employment change was up 0.5%, beating expectations. On the wages front, they were roundabouts. Private wages, excluding overtime, was up 0.4 from a prior 0.5. Excluding overtime, wages including overtime was up 0.5 versus prior 0.4, so one up, one down. Average hourly earnings on the quarter unchanged 0.7%. It's services PMI day as well today. We had one out from Australia. Their services for January improving to 56.3 from 51.1, beating expectations and a decent jump over last month. We also got final numbers from Japan coming in at 53.7, so confirming the rise, the prior 51.6. China, the ratings dog number coming in at 52.3 from a prior 52 expected and previous. Just going back to the Aussie numbers, Goldies now see the RBA hiking one more time in May. There's a few expectations for another hike to come in May. We also got the rest of the PMIs. Spain, this is the first number, not the flash number. That went backwards. Was expected to drop to 56.6, but came in at 53.5, so a bit of a soggy one there. Italy, they done a bit better, rising to 52.9. France, theirs was less crappy than the flash number, but still in contraction. Germany had a bit of a wobbler. So December was 52.7. The flash number jumped to 53.3, so a decent improvement. But the final number went backwards. So it actually finished down versus December. Still in expansion, so that's good news at least. But bit of a savings grace there. Eurozone services reflecting what's gone on in the rest, dipping a bit to 51.6. The UK, they went backwards a little bit over the flash number, only by 3 small pips, so no big deal there. The big feature among the PMIs was there's still heavy price pressures. I pointed out France in their manufacturing data had higher input pressures, but firms are less reluctant to pass those on and cut prices. Different kettle of fish in services, where output prices jumped strongly as well. For the UK, job losses are still evident in that PMI, and sticky prices, sticky inflation in there as well. So that keeps the headache going for the BOE as to what they act on with rates. Do they go with the jobs, or do they go with a hotter inflation? We also got Eurozone CPI numbers, which came in as expected at 1.7%. The prior was 1.9%, revised up to 2%. So that was a 3-point drop in that number. We're now, or we remain below the ECB's target, which is close to, but below 2%. The core number came down a pip to 2.2%. This one is really going to be key, potentially, for what the ECB does next. They like to do the old accounting smoke and mirrors. Even though CPI is below, they all point to the core number still being above. Germany, engineering orders fell 5% in December year on year. That was mainly driven by a drop in foreign orders, export orders down 9%, because domestic orders were up 7%. So a bit of a mixed picture there. And while we're talking about imports, exports, just jumping back to the Spanish PMI, it was noted in the report that the reason why Spain went backwards was due to falling export orders, driven by not much buying going on from their neighbours. So weakness in other Eurozone economies dragging down Spain with it. So it just gives us a bit of an indication what's going on there. We had Riksbank's minutes out as well for their last meeting. Thedéen said a rapid and large and persistent appreciation of the krona from today's level could complicate the monetary policy deliberations. Jensen says that they're hesitant on keeping comms on future rates the same. They've kept a pretty straight message for the last few meetings. Kay, going to bring you in now. Bit of a quiet one this morning. Not much to take from the data. What do you make of that BOJ piece? You already know they're not going to jump in on anything.
Yeah, it's again an ex-BOJer. They have a lot to say when they are not there anymore. I mean, it's not wrong. Ueda has said, and they repeat it on all their Bank of Japan meetings, that they are ready if it really deviates from fundamentals, or when the market goes all ballistic. I think it's one that we still need to keep an eye on, because after the elections, it could actually go for another leg, and I think they are really saving their ammunition for if it's really needed. We also know from whatever happened in 2025 is that they are reducing their bond buying, but also the Japanese whales are reducing the super long term. So I think, yes, it's a case of keeping ammunition for when it's really needed. They know that the market is looking at that side because they are hiking rates. There is now the polls we see, the articles we read are all steering, as I expected, towards a potential landslide victory of the LDP, which is probably going to push the market to continue to do what it's doing now. That is trade the loose fiscal policy, and that's probably where they will stand ready. And so we all have to look at it in the context, I think, for the next week at least, of what's going to happen in the elections. And I think then, once the hump of the elections is over, and if we get the confirmation that Takaichi's LDP is going for a landslide victory, then I think they are going, all of them, to be on high alert, whether it's the MOF on the yen side, or the Bank of Japan on the bond side of things. So yeah, I think they're keeping their ammunition. We've seen this push in yen, and yes, at some stage it's been rapid, but it's somewhere logic, right? We've been talking so often about all those stimulus packages, whatever Takeichi wants to put in place, etc. That it's all logic. What is happening right now? So they they prefer to keep all the ammunition for when it's really the shit would hit the fan, which is a possibility next week, if the elections go as the polls are foreseeing right now. So that's the main thing. They're keeping their powder dry for now.
Yeah. So I've got a couple of questions.
Mm.
Okay. So we know that the Ministry of Finance is, they're in charge of telling the BOJ when to intervene, but
Mhm.
they obviously do that in close communication with the BOJ. It's probably more like the BOJ are watching the charts more than the Ministry of Finance per se. But regarding the bond markets, is it the BOJ that has carte blanche to jump in? That's the first question.
Mm. Okay,
So can the,
the bank, okay, the Bank of Japan is responsible for, but it's in close cooperation with the government as well. We know that famous 2013 pact that they sealed, right? So it's in close cooperation. There is a part of there is obviously the huge pack of JGBs that's still lies at the Bank of Japan, and they have the right to do with it within certain norms what they do. But it's all going to be in close cooperation with the Ministry of Finance. Now, deciding whether the Bank of Japan is going to do unscheduled bond buying, that's going to be decided by the Bank of Japan.
right. So
Clearly.
So that brings me to my second question then.
Yeah.
If, according to that sources piece, the Bank of Japan deem that the rise in yields is down to fiscal policy, can't the same excuse be levelled at the level in the yen? So is there not a case for the BOJ to say to the Ministry of Finance, well, if we don't deem it right to intervene in bonds because this is all down to you and your fiscal spending, um, how can you give us an instruction to intervene in the yen when it's rising for the same or it's weakening for the same reason?
That's the separation of duties. The MOF will the MOF is clearly looking at and we know that if you let the yen weaken further, it's going to push inflation even higher, yields even higher. So I mean it's all working against the what the government needs to do right now, Takaichi, and then so that's going to be the MOF's decision. We know that they are on high alert, but the Bank of Japan, if the MOF decides to intervene, because they are having the big account, the reserves account. I forgot the name exactly how they call it, but yeah, they are managing the FX reserves. They can just instruct the Bank of Japan to intervene. Yes, and again, as we've been saying, and just a couple of minutes ago, I mean, there is always a cooperation, and they will very likely, how shall I say, talk to each other before it all happens. But if Katayama decides to press the button, Ueda doesn't have a veto right.
Yeah, yeah, okay, yeah, that's cool. I just thought of that just this
Mm,
morning.
mm.
How
I
it
think,
might work.
and yeah, and as you were saying, it's not only that article overnight that pushed the yen higher. I mean, we've seen after the rate checks and then already when Besson said he was absolutely not intervening in markets. We've already seen the yen starting to weaken again. This article is just another little trigger, and the closer we get to the elections, the more it's clear that Takaichi's LDP could get that landslide victory. The more the market is going to push the boat because there's going to be a massive amount of spending again coming, and Takaichi herself has already said this is not a period for fiscal restraint.
Yeah, yeah. So I think we're getting into that frame where we start to look at the options again. I think,
Oh
and
yeah, definitely,
a couple
mate.
of puts on.
Definitely. If not today, because we pushed quite a bit higher and the index is tumbling, at least before the end of the week, I'm going to look at something because I think for next week we are going to have to be on extremely high alert if she gets a victory.
Yeah, absolutely.
And actually, even the other side as well. If there would be a huge surprise and
I was
those
going to
that
say,
new
yeah,
party gets it, then the market is going to veer the other side because they have been talking about fiscal restraint.
Yeah. So we've got. I was going to mention that as well. We've got two potential ways where looking at the downside in the yen pairs might play out, either on intervention or the fact she doesn't get the win she was hoping for. So yeah, we'll keep an eye on that as the week progresses. Right, going to move on. Fed Mirren says Walsh is a fantastic choice to lead the Fed. He also thinks they need to cut rates by about a percentage point this year. So he's back to that old game. Now, what's also happened is that he's resigned from his role at the CEA because he said that if he was going to stay at the Fed for longer than the end of January, he would resign his current post. He has therefore done that, and he's going to remain in the hot seat until this Walsh stuff goes through and he takes his place, or it all gets changed around. So Mirren is going to remain there for the foreseeable future. Fed's Barkin says rate cuts so far have helped ensure the health of the jobs market, while the Fed completes its last mile of returning inflation to target. Given how long inflation has remained about target, that last mile has been about 20 miles so far. It says the policy rate is now at the higher end of estimates of neutral. It says Walsh seems capable and charismatic. We'll see how that unfolds. US building firms are considering a plan for 1 million Trump homes. And this is part of one of Trump's policies to get home building kicking off, making things more affordable as well. So looks like major builders are getting on board with that. And we've got the end of the shutdown. That was all signed, sealed and delivered, voted for, signed off last night. So the shutdown is over. There are still a few sticky points, including all this DHS stuff, which has only had a short can kick than everything else. Everything else has been sort of can kicked until this September. So we've got a few months before we play this game all over again. As I say, the DHS stuff has been kicked to only a few months ahead. So we play that game again later on. And that's about it, as far as I can see. I'll manage to drum up. Unless you've got anything else, Kate?
No, mate. Apart from drones getting shut down, don't know if you mentioned that. The Iranian drone, but I mean, yeah. One thing I would like to just come back on it is the Eurozone CPIs, because depending on whether we put the filter on the calendars or not, the Dutch CPI actually came down quite a bit from 2.8 to 2.3 or 2.4, and that was also seen because I looked at what ING was saying about that, and also seen as a bit of a surprise. So and the Dutch are usually relatively close to what's happening in Germany, and let's say the core, what people used to call the core European, call it the Germanophiles countries, and yeah, that looked to have come down quite a bit as well. So I think it's worth keeping an eye on those on that Eurozone inflation.
Yeah, and as you can see there, Italy as well coming in with some soft numbers, well below target, and two. Germany went the other way though; they went up, so it's not all linear, it's all
Yeah,
going in the same direction.
yeah.
But,
I must say Germany is a difficult read. Just trying to know what exactly is going on there, because they had all these big plans for investment, etc., and it muddles the picture a little bit, because the longer it takes to put it all into place, the more German numbers could actually be a little weaker than better, as I would have expected, starting somewhere third, fourth quarter of last year.
yeah, well, that PMI sums it up really.
Yeah.
Jumping in the flash number, going backwards in the final number. Thanks so much for early New Year positivity, but yeah, I think it's going to be a funny old mess for Europe in the early part of the year. Anyway, right, I don't know why Jolts is on that. this calendar. I don't think we're getting it. They probably just sprung that forward. We haven't got too much out today apart from the ISM and NBA stuff. So that'll be coming up later on. We also get ADP, of course, which we're expecting 46,000. So keeping to that sort of double-digit figures for that one. So that'll be. We don't know when yet. We're getting the renewed data or jolts and the NFP. Hopefully, when the Yanks wake up later on, the BLS will update things and we'll find out whether they're going to do it. They should have all the bloody data compiled by now. So it's just a question of whether they release it. Depends on whether they've got a multiplier on there. We were shut for 2 days, but it's going to take us a week to get things done, sort of thing. So we hope to find out later today from the BLS when they're going to release the NFP. Joe, I don't know. I don't know if they can, if they've been shut for 2 days, they've got 2 days of catching up, which puts them past Friday. But who knows with these lot? We'll find out exactly what's going on. Right, so let's might as well start on dollar yen. That's where the page was sitting. So this is a pretty strong rally, obviously. I've obviously got my big levels here, 152, which we got close to and held. 155, not really done much. It's paused around there for a couple of minutes, but we've gone through. We've been breaking up through all these more minor levels. 157 is obviously the next big one. We'll have to see whether it does something there or if it just goes straight through that. I think if we are climbing above 157, then the MOF are going to be getting hot under the collar again, particularly if that's happening before the elections. Kay, I think if we're hitting 158s today or something, I'm going to be putting on some options irrespective of what happens.
Yeah, me too. I mean, I've already looked at it. It seems like the 2 weeks 154.5 is about 55 pips, so I think that's manageable. And that is playing on either an intervention or a big surprise over the election, right? Because in a natural way, this move isn't done to me. I mean, if you look at the fundamentals, what's happening, it shouldn't be done. But we know that interventions is going to should be putting it back at least to 152 or so. If we see some 53, 52, whatever. Yeah, I'm going to play it as well. I mean, it's a relatively cheapish play. And we know what we risk, right? Because you can sell at 158 and then you wake up at 160. What do you do with looking 200 pips down the barrel, right? So exactly. That's why I prefer to do options. It's you put it just in the fridge and you wait for what's happening. I'm always looking at a 2 week because which would include an NFP as well. In this case, if we get there, assuming that it comes out next week, so we've got a bit to play with, and that's always why I prefer to do slightly longer than the 1 week. We did that over the turn, and when they were threatening those interventions, etc. But it didn't make me a lot of money, so I'm going just a tad longer this time.
Yeah, Ali, no, I won't sell spot at 158 to play intervention, as Kay's just spoken about. I've just spoken about options are probably your best bet because you're limited to your premium, really, and if you can pick it up pretty cheaply, as Kay mentioned, 55 pips, or you short 158 and wake up Sunday morning and it's 160, you're down 200 pips. So yeah, it's all about risk management for this sort of thing, because you don't know that 158 is going to be a top nor 160. I think we have to look at it probably the same as the Bank of Japan. The details will come out if the yen starts weakening strongly. You know what I mean? We could get another ring around or something that's a bit more than just verbals. So I'll be thinking that's the risk. That if it starts ramping again like we saw after the Bank of Japan, they'll come in with maybe another phone call around. But do you think that might have limited impact because they've done it once and we're already back up here? And whenever they do the same thing, it just loses a bit of
Mm.
power each time.
Yeah, it depends how they communicate around it. Well, they will never publicly say that they had the calls around like last time as well. But I think if it comes after the elections, it's going to be paired with very strong verbal language. Because the move will have been a speculative move over the elections. So I think this time, yeah, they could pair it to some more verbals. But uh, again, if it stays at rate checks, even if they do two, even if they drag the U.S. Treasury back into play, we are going. If they don't do any real interventions, it's going to, yeah, maybe, assuming that they do it from here, maybe 154 again, or so 153, and then the thing is going to go back up. As I said, in a fundamental way, assuming that Takaichi gets it, I think there's one more leg in it, for a weaker yen, and then especially I think the come after the summer, maybe this the second part of the fiscal year in Japan. That's where we're really going to have to be careful. And personally, I think there's a fair chance that, depending on what the data will be doing then, but if they start to improve, then there will be a natural path for the yen to strengthen. But not before we know, and not before she spends all that cash, and we know how they need to fund it, etc.
Yeah, I'm just looking into it just quickly.
Mm.
We should get the results Sunday.
Yeah, yeah.
I don't know what, which is obviously Monday morning in Japan. The Diet
Yeah.
won't open, or may not open until February the 18th,
So,
and then they're going to try and potentially squeeze in getting a budget bill through by the end of March. So that looks to be the timeline.
yeah.
Just
Yeah,
looking
and
into.
regarding the results for the elections, we should start to get results like, not far from our noontime, because that's going to be like 8-9 p.m. in Tokyo. I think we should start to get results over there, and it will be relatively quickly clear, in case she gets a landslide victory, what the numbers are saying.
Yeah, cool stuff. Right, Joe, buy rumour sell fact ahead of the elections. No, I think it's buy rumour could get worse after the elections, as we've been saying. The expectation from us at least is that we see further yen weakness if she cleans up. If she gets a solid majority without needing any coalitions, then we're expecting yen to weaken further because that also meant her ability to pass all her fiscal measures. Right, let's move on. Quick look at Los Euros. If I can get the screen going. This one's, I talked about this range here, 20s, 30s. We've banged ahead in there. Can't get through it. We've got this pretty solid support down around 117.75, 80. So this is our range for now. It did look like it was looking to break up through this. It was doing a bit of a grinding, but it hasn't. So that's the marker now. If we bounce from 118, where we've got a bit of support, then I think another move up here and it probably goes through. Elsewise, it'll be interesting to see what happens on another test down to this level if we come down here pretty quickly. Volt is dipping a little bit once again while there's nothing going on. So we're locked in this 50, 60 pip range for a while until something happens on that one. Kay, which way do you see this one going at the moment? It's sort of the air's come out the tyres a bit.
Yeah, and if you get a couple of, stronger data on top of that, out of the US, this afternoon, we got the ISM, right?
Yeah.
Could be a case we are visiting that 117 and a half. That's if the data don't show any weakness. I think the dollar in general, and then you look at stuff, especially the euro. And then the yen, but the yen has a different story to it as well. But if you stick to the euro dollar, there's a bit of a case that it's getting a double whammy somewhere, because imagine that we get those better US data. We had okay data yesterday, and get a few on top here, and then look at what the euro crosses are doing. Besides what's happening on the yen, but the euro crosses are all relatively on the heavy side as well. Euro sterling not in the least, but even euro antipodians, euro gnocchi is also has also behaved pretty weak of late. It's all of them, you know. And if you get a bit of stronger data out of the US on top of that, we could go and have a visit of that 117 and a half, especially as you said today, that 118, 20s, 30s there looked a little bit that cat issue.
Yeah, very much so. Very much so. I was going to look at Aussie Kiwi is on a bit of a move. We finally, well, I'm not,
No
I'm not jinxing it.
jinxing.
I'm not jinxing. We've broken above these, short-term highs that we had here, these bounce highs that we got. We are trying to take on this 16, 50, 60s level that's been a bit on and off. Set sights on these prior highs, so we could be off to the races once again. Aussie looking better again. A bit of a bounce in gold as well. Going to be interesting this one, Kay. What happens up the top here?
Yeah.
Could signal a decent double top if we hit that area and hold it once again. But if we go through, we're off to the races.
Yeah, and if you put what I did on my chart, a little line from that high over the second high, the last one we broken already through those two little smaller prior highs, and I think that's already a kind of positive. Then we had a bit of divergence again on the US data, US Australian data versus the Kiwi data yesterday, where the market was actually is actually expecting a little bit of a more hawkish RBNZ, not really a rate hike, but a bit more hawkish RBNZ. I think that lukewarm report with the unemployment rate ticking up is going to keep them in their box. So I think, yeah, this cross should, in theory, still be bid. That's how I'm trading it anyway.
Yeah, like it very much. Right, I'm going to knock it over, mate.
I think there's one that people are looking at now, and we've been talking about that already a number of times as well. Is that euro sterling, right? We are here. I think this 86 could stretch it to maybe that little spike there around 95, was it? We're in the zone, huh? Lows, highs, lows. It's going to be important around here, 86 figure 20. I think it has maybe more to do with the sluggishness of the euro, perhaps, than real strength of the cable. Sterling, although if you look at cable, it's been relatively bid as well. Well, one is probably going to be linked to the other, but this is not a real natural move. If you look at how usually the difference in speed, the dollar has been bought since those 120s highs. And when the dollar is bought, usually cable goes a bit faster than the euro. This is not the case right now, which makes it a little bit of a more dangerous play to catch a knife here. The takes are there, so the levels are there. If you want to play it, feel free, but don't forget to not let it go too far downside. If you here is a little bit of a, but that's going back already to 2024, a little bit of a high here around 90, which you could hide your stop under there if you want to play the long side from here. It is a quite reasonable level. So that means two things really. Either we hold and we start to bounce from here, and it's going to be a serious bounce if you look at the text, if it really holds. or we're going to have a look below it, and we could accelerate down to 85.40 relatively quickly if it does. Um, Looking at both currencies separately, I don't see too much of a reason to really drag it much down, but certainly not higher, and certainly not higher. By that I mean, yes, we do have ECB and the Bank of England coming up as well, but there is a difference in interest rates, right, between sterling and the euro. So that may be the factor that will continue to weigh on it. I'm not really inclined to get the butcher's glove out and catch a knife. How about you, Ryan?
Um, I think I might just maybe job it right off there. I think this is playing out as I thought it would be coming into this year. You know, the
Mm,
data from UK has not been too bad.
mm,
So yeah, I think if we hold around this 80, 85, 90, 86 level, I'm going to job it a bit long
yeah.
and then see if this positivity wanes in the data.
I
We've got obviously the BOE tomorrow as well.
Yeah, ideally, actually, we should have a look of it, maybe like 4 or 5 pips below, and then start to go back into it. That probably would give a maybe a better play, right? Instead of going before and then put a stop,
Yeah,
get stopped out, and then it bounces. Um,
exactly.
yeah. I don't know because I don't see too much of a reason to be long euros as such. But okay. Um, it is a big technical level, so it maybe just is worth a play. And if you look at the cable, that's really that 25-35 zone in cable. If that goes, then we're probably going to go back higher. Is it going to be driven by the cross? If it's just the cross, it should maybe go a little bit slower. But if driven by this afternoon weaker US data, then we're probably going to trade 138 very, very quickly because the market, I don't think, is extremely ready for weaker US data. So this may be one of those pairs that creates a surprise and really goes up if we get negative dollar numbers. So I'd rather play the cable on the break than going on the euro, for instance. That's how I look at which currency could do better than another one. Yeah, we need to look at. I'm going to skip Aussie and Kiwi today because I mean, really, they're struggling. Again, we had a bit of a move higher towards when we got those data out. Yes, it's doing well, but I still think it's the Aussie is perhaps a better play on the crosses rather than, and then I'm especially thinking about Aussie Kiwi, rather than the dollar because the dollar isn't showing too much weakness. Same thing happens here on the Kiwi coming back down. We're actually trading inside that traffic zone that we've already been trading around June, July, August 2025, and we're having a bit of trouble to make further headway. And same happens on a lot of dollar pairs. Right, we have to look at gold. Gold. We didn't hit the 5100 yet, but we've been talking on our shows. Come again. Tell me, Ryan, you were opening your mic.
No. I'm
Oh,
just
okay,
saying.
okay, okay. So we were talking about on our shows about these 4400, 5100, and as I also mentioned on Face yesterday, I think it's really the range that we need to really observe because it is a wide range, but as we see over the past only 3 sessions, we've hammered through it and gone down to that 4400 support, and now we are back already at the 5100 support, give and take a few bucks. We ran just short, but it's also the 38.2 of the last move. It's been an area where we traded around already in the past, so I think it's kind of shaping up as the decision range. So if we start to get back above, the market is probably going to get excited about a rerun to the prior summits. Okay, it's going to have probably some intermediate stations, somewhere in the 52s, somewhere in the low 53s, and then 54s. But really, I think the 5100 is a bit of the magic level, and I would then say that if it also fails around here, then we will have to look at how this wider range will develop, which is probably then going to gradually slow down and look at intermediate levels, maybe around that 49, 40, 50 again, or somewhere in the low 48s, high 47s, which is about midway of that range. But I really think that we should pay attention to what's happening over the next few sessions. Really, I think this range is good enough to monitor for what's next in gold. Silver, yeah, a bit of to me at least, it has a different look. Yes, we've gone higher. Yes, we stopped around this zone here. We're actually trading right on it. Yeah, there are a few retracement levels right up around 91. But here also, I think we may, over time, start to form maybe more a little bit of a range. If we break back above 101, 102, it's probably going to go again towards those highs. But before that happens, I would say watch those intermediate levels a little bit. If it pushes on 96 before we get to 100, if it comes back down, look at what's happening around 85, 86, for instance. So that for the silver. Is just the potential and the possibility that I would look at, just knowing out of maybe experience, although we never experienced such big setbacks or such big moves in such a short time span on either of them. But if you look at other big moves which has happened, and then I'm particularly, for instance, thinking about dollar yen back in the dinosaur days in 1998, we had like a 23 big figure drop in less than 48 hours. And what happened afterwards is we started to stabilize somewhere in the middle after interventions, etc., before then taking a new direction. So it would not be unusual to see this kind of range forming after such a huge moves. Okay, what else? I think we're kind of done for today. No, Ryan, what do you think?
Yeah, I think we can call it a session there, mate.
Yeah,
Given
I think
the
this is.
viewers.
Yeah, I think this is what Blake already showed yesterday on Face Show as well. This if we would get a good US data again on top of already a bit of recovery in the dollar, this is the zone, I think, 50.70 on the euro, 45.70. This is the zone that we will have to look at in the euro. And with that, Ryan, back over to you, mate.
Thanks very much, mate. Wonderful stuff as always. Thank you, everybody, for coming to the Flow Show. Catch us later on Face. Otherwise, we will see you bright and breezy tomorrow. Have a great day, everyone.